On the other hand, members of the Monetary Policy Committee, MPC, of the South African Reserve Bank are meeting from today to Thursday to decide a suitable interest rate stance that sees inflation settle in the middle of the 3% to 6% target range, while the quarterly projection model, which serves as a policy guideline for the MPC, suggests 3 further interest rate hikes by the end of 2020. Analysts believe the Reserve Bank is unlikely to raise interest rates this month. Maura Feddersen is a PwC's strategist and economist, and she joins us in the studio to unpack this. Thank you very much for joining us, and compliments.
Thank you, and compliments to you.
We won't stop saying compliments until the end of January.
Absolutely.
Let's just have an assessment of how the South African economy is performing. Like we had a very difficult start to 2018. Now, coming this year, it's January. Should we have the same mindset as we had last year, January?
No, it's likely that we will see a cyclical upswing this year as well as next year, where economic growth could accelerate to 2%. However, the recovery is muted, and there are a number of risks to that outlook. In particular, there's a risk of a slowdown in fiscal consolidation. There are concerns around electricity supply, as well as Eskom's financial position.
And by the way, the World Bank has reviewed the economic projection that it won't perform as much as expected, from 1.8 to 1.3. Can we perhaps talk about the factors that they had to consider for arriving at that percentage mark?
Well, it certainly feels like a retake of 2018. At the beginning of last year, the Reserve Bank expected growth of above 1%, 1.4%. And then by November, that was revised down to 0.6%. So hopefully we won't see that continued revision downwards of economic growth as we progress through the year. It is possible that the concerns around electricity shortages in particular, and Eskom's position, as well as what that might mean for credit ratings, that those factors are contributing to the World Bank's view of how much South Africa will grow this year.
So when we look at all the fundamentals, it seems like when we have to look at local economic factors, should we be worried about that?
So it is hopefully the case that the improvements in economic sentiment that have been built through initiatives like the Investment Summit, the Jobs Summit, that those will contribute to improved confidence, and that will stimulate much needed investment, which is a key ingredient for higher economic growth.
When we look at the international oil prices, I mean, like they were at a staggering $80 per barrel, and all of a sudden now they've gone down beyond the $50 mark. But on the other hand, you must remember that when we were talking about the petrol price last year in South Africa, especially around June, many people were really worried about the trend of the increase of the petrol price. So what are we going to talk about then when we have to look at the way the Brent crude price is and how our petrol price is at the moment?
So actually in November, although Brent crude prices were already falling, the South African Reserve Bank increased its expectations for Brent crude prices from $70 per barrel to $73, because at that point in time the expectation was that this is the prices that we would see going forward. But now we are at about $60 per barrel, which is about 28% lower than what we saw in the middle of September last year. And that has really had a great impact on petrol prices and has provided a welcome reprieve for South African consumers, because the price of, for example, unleaded petrol, 95 unleaded, is down 3 Rand per litre. For a 60-litre tank, that's 180 Rand savings. That's significant. And that provides the South African Reserve Bank potentially with scope to keep interest rates on hold in January.
So then what is the inflation outlook when matters are like this?
So that helps the inflation outlook. Similarly, given that the rand has performed relatively well over the last few weeks, those things are helping the inflation outlook. So in November, the expectation was that we would potentially see inflation of around 5.4, 5.5% over the next couple of years. And there was an improvement to the outlook because the peak was revised down from 5.9 to 5.6%. That means that inflation might be moving closer to the middle of the target range.
All right, so they won't increase?
Highly unlikely.
All right, thank you very much for making time.
Thank you.
All right, Maura Feddersen, who is the strategist and economist for PwC, talking to us about the likelihood of the Reserve Bank not increasing interest rates. Back to Peter.